We are just minutes away from Intel earnings. Ahead of the report, the stock is down about 2.6%. Here's what analysts are looking for. The chipmaker is expected to post adjusted earnings of 22 cents per share on revenue of $14.4 billion. Just to give you perspective, in the same period last year, Intel reported a loss of 10 cents a share. Let's bring in Nomura Asset Management International Chief Investment Strategist Andy Goldberg. And I would imagine that you're not in love with the tech sector as one of your favorites at the moment, in part because there's so many issues flying around. I mean, Intel's up 336% over the past year, in great part because the Trump administration took a major stake in it. There's an investment there, and they're also trying to get their fabrication plants built out once again. So why not technology?
Well, it's not that it's not technology. We're already kind of married to it, whether we like it or not. You've seen how much the Mag 7 have gone up and how big those are in portfolios. What we're advocating for is for investors to do a bit of what we would call portfolio hygiene and just make sure that they're diversified. Like if something happens and those stocks really have a meaningful wobble, you're going to want to make sure you have bets spread across the table. And the good news now is that we're seeing such a healthy economic uptick. There's a few things behind that. Part of it's the CapEx boom. But there's also the One Big Beautiful Bill Act has been stimulative. And when you see overall economic data improving, that tends to be good for broadening. It's good for smaller companies. It's good for companies in different sectors. So it's just, yes, tech, but also what else is there that can round out the portfolio so that you're not beholden to just one big bet.
And you say yes to financials, yes to industrials, yes to healthcare.
So part of that, those yeses right there, is we're looking a little bit beyond the CapEx boom, which, by the way, that's going to play out through several more years. You're going to have some fits and starts. You're going to have some companies come in and revise their estimates for CapEx spend. Like, there'll be volatility. But what we have to start to do today is think about who are the multi-year beneficiaries of all this new computing power. And so when I think about financials, and I've worked in the industry for a long time, we're already starting to see some really powerful use cases about how to make our workflows more efficient, how to help clients get better outcomes. The healthcare space, really huge opportunities to increase, or actually I should say decrease the time to market for certain drugs. There's so much that can happen from the healthcare system is very stuck right now. It's difficult. Everything's fragmented. AI can really help with that. So there's a lot to look for. Tech was the start. Building the infrastructure, laying the groundwork to make AI possible. Now there's time to look at the beneficiaries.
And that's what you say is what to look for, the return on investment for the other sectors like financials and healthcare. Great to have you, Andy.